Hello, everyone. It is 8:01 a.m. on Tuesday, the 10th of April, 2018. Coming at you from Chicago. Thanks for joining me again for another Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market is allocating to risk this morning and driven by news yet again. The S&P is trading at 2647.75 currently, and we are trading up about 1%. As I mentioned yesterday, any type of news about the trade issue is likely to push the market more than 1%. And this morning, there was a fair amount of that coming from China, the Chinese president saying that they're looking to lower the auto tariffs by as much as half, and there was a lot of comments from him that are more appeasing to the market. So yesterday we finished lower. We'll review yesterday in a minute, but the leaders today, crude oil's also receiving a lot of chatter this morning from Saudi Arabia. Saudi Arabia said that its ambition is for oil to get back above $80 per barrel, at $80 a barrel or better, and that caused multiple spikes in crude, and it's trading higher by 1.77%, up $1.13 on the May contract. So overall, allocation to risk coming into the market, a trendy kind of day or Globex session, and it's likely to continue into the day session. So again, that's where we stand. There were several numbers. You can check on that. PPI came out this morning, and there were several speakers, especially Nawatni, from the ECB, who had comments about the need to raise interest rates. That caused a spike in the euro. The euro FX up 27 pips, up 0.22%, and so on. So there's a lot of news-based movement. The market just waiting around for the next pop to hop on. Let's take a look at what we expected yesterday. I'm still recovering from my voice issues, very sore throat, a lot of talking. Actually, let me take a moment before I go over the technical stuff and just bring you up to speed on what's going on. If you're following on Twitter, you probably noticed that over the last couple of weeks, 2-3 weeks, I haven't been commenting about the market. And it is because my focus, we launched Convergent Trading on March 14th in beta, and there's a lot going on there in terms of work that still needs to be done to build up the community to create the virtual prop environment that I'm after. And so my commentary since then has been, my live commentary since then has been in the member chat portion of the service, along with weekly webinars and impromptus and everything else. There's just so much going on, it's hard to keep up. But as things get up to speed and I'm able to make more time, I'll re-engage on Twitter and try to provide some structure, some context on the narrative of the market. But currently, I'm really focused on those who've committed to joining, and that's where I've been. Okay. Let's take a look at what we expected yesterday. Yesterday, the expectation was for the market, since it was opening right in the low volume node, as marked here, the low volume node in between the two distributions from Friday, the expectation is it would look for prices lower, look for buyers lower, and then take a pop, was looking for a pop up into the upper range, 26, 28, 25 being the overnight high. I was looking for at least that from 2600. I was looking for about 30 points. And that did not happen because the market just took off right from the open. The secondary is we take off from the open. We test the high volume node at 2633 or so, get tangled back up in 26, 28, 27, and then fall back through back to 2604, 2604.50. And so overall, that did not happen either. What did happen is the market just shot up from the open, and it turned into, my expectation also yesterday was for an outside in trade, which means that as it pushes into my stock zones, my areas where I engage, that's what a stock zone is, the areas that I seek to engage the market in, based on the context of the prior day, several different things, including overnight action. I was looking for trades that look to engage on the short side on the pops into the stock zone. I was looking for an inside day yesterday, and I was looking for a range of about 20 to 30 points, and I expected it to rotate around itself. Now, that was confirmed early by this open auction. The market had an open auction, very quiet open, tested lower, tested higher, pulled back to the mid right here, and then started to run up, and I started to engage short in here and just couldn't get anything off, anything meaningful off, and so I ended up having to close that trade, and then we started to push higher. I engaged again on the short side, but overall yesterday was a down day for me because I was looking for these areas, these key high volume nodes to provide a sort of an envelope around market pricing. I expected us to engage and stay within this low volume node, and the early indication was that it was a 2A trade. Now, once we broke out of the IB and continued past 2633, then it was hands off, and then of course up here we got the news on the president's lawyer, and the market started to drive lower, and you can see the delta here. The delta really took a dive, and it actually did it ahead of price. Delta went negative, and the delta negative, the equivalent of delta negative is the open. Okay, because we start every day with a zero volume delta, and then we start measuring how many contracts traded on the offer versus how many contracts traded on the bid. And so it's all relative to the open. And you can see here that the market reached the open right about here, and the delta was already negative 20,000, 23,000, something like that. There was a fair amount of selling that went on. The other thing that was anomalous about yesterday, now we ended up with a trend day profile. As you could see these multiple high volume nodes throughout the profile going up. And what we ended up doing is we ended up pushing through double the IB high. Double the IB high is this little dashed line that just came on. This little line here. This projects the initial balance, and it projects what it is at 100% on 100% projection, and we pushed through it. So by all accounts, yesterday looked like a trend day up, and then it pushes down back into the IB, and it just goes neutral unbelievably. This is very, very rare that we end up with a trend in one direction and then the market goes all the way back and becomes neutral. What is much more common is that we break, trade a little bit, come back, go neutral, and then we end up with the trend day down and closing on the low. That is called a neutral extreme. But for us to push a trend and then turn around and become neutral normal means we closed inside of the initial balance. What is the meaning of neutral? The meaning of neutral is that we push the high and the first hour's high and low, and the occurrence of that is around Neutral nowadays is around 28% of all days tested, 2,500 day sample. It's around 28%. It fluctuates between 28 and 34%, something like that, of days that would go neutral, meaning it breaches the high, the IB high and the IB low. And yesterday, it exceptionally pushed the IB high, doubled it, came all the way back and went neutral and finished in the middle. Very, very odd trade. I can't say that it was an easy read. Currently, it's trading at 26.47, above yesterday's initial balance, mid VWAP, and up against above the point of control of yesterday. We have essentially been, the auction was essentially interrupted yesterday afternoon, and it resumes. It has resumed basically the scene of the crime back into 26. The scene of the crime was 26.4950. And it's basically resumed that and put in an overnight high that's even higher. So very bullish day today. As we come into the session, the high is 26.58, which is above yesterday's high of 53.75, and Friday's high of 56.75. We're pushing back into, we almost got to the scene of the crime of the China tariff news. That news that the U.S. will be imposing tariffs on a bunch of Chinese products, and so we're back to that, and the auction is resuming to the upside. That's quite a recap, right? So there's a lot going on. There's a lot of noise in this area because we have been trading sideways for quite some time. So if we look at the overall picture, let me kill these stock zones here. If we look at the overall picture, we dropped on February 2nd right in here, and we've been trading inside of the range of that week from the 2nd till the 9th. We put in the high and the low for the last 2 months. And we've been trading inside of these 2 months highs and lows. We've pulled a higher low here last Monday, and we've just been, jigging around back and forth in this range. So overall, as we do that, we start to develop more and more and more areas, support resistance areas and zones, and it gets noisy. As you can see here, I turn on my zones chart, and it's just very noisy in here. So we're opening this morning on the upper end of the range. I looked at the 2-day range yesterday just to see where we were in terms of how we traded against the snaking market here. I wanted to see what areas have been accepted or rejected. That's what volume profile is good for. And overall, the plan here is that as long as it stays above 26.13, the MC point of control, it is likely to challenge 26.72 up here. The balance day last Thursday, a very quiet day, and we're likely to push through that today. So that's how things are shaping up. Now, looking at the overnight session for clues, let's kill the zones. Look at that vertical move. I mean, we just took back a big roller coaster ride. It's a nice coaster ride there. We basically took back all the selling that was going on into the close yesterday and have come to balance. And so what we did is we pushed all the way up to 26.58 and found sellers. And that's basically what this did. And you could see that volume dried up in the overnight session, and we are in balance. So what the market's saying is we're liking these prices here. And so it's stuck here. So we started out with the Asian session on the reopen, traded there for a little bit, and then poof, and the market just rebalanced. And this is how news trading looks like. So what have we got? We're trading against the overnight's point of control. We're above mid for the overnight. We're above mid of yesterday. We're above yesterday's point of control. all signs indicate that we have some pretty decent support, and the likelihood, the better play is likely to be a test and a push higher this morning. So this morning, the expectation as far as the scenarios, the trade of the day, so to speak, the expectations are for, again, an open auction. We're opening in range, a test lower to rebalance a little bit, and I'm looking for it to pop through and push above the 2658.75 and 2653 and get back into this range. This becomes a template day here, and it's likely to push into 76 today. I'm looking for it to challenge the 76 area up here. That's the primary scenario. So for the first 20 minutes, half hour, I'm going to just wait for the market to decide what it wants to do, what tests it has accomplished, what are we doing, how good of a job are we doing. That's what I need to check for, and then I'm going to look to see if I can get in before the pop, probably in the first half hour trading. Get in on the pop to challenge this this high. We have multiple week highs here, by the way. There are week highs across the last 3 trading sessions, so I'm expecting those to be challenged today and to be taken out. That's the primary scenario. The secondary but more unlikely scenario is we open, we test above yesterday's high, push into the prior day, the profile of Thursday, and fall back into the range. This is unlikely, but if we do, then we are likely to target this 2633 area as a key area, and then if it's not able to hold on to this, then we are looking at yesterday's lows. But again, you've got to be careful these days because we're not driven by earnings, we're not driven by the market, under its own power. We continue to be driven by news, and at any point we may have a tweet, we may have a comment, we may have somebody speaking somewhere that can impact the outcome of our trades at any given point. So don't take your stops lightly. It's very important for you to stick to your plan. I did yesterday. It's not pleasant, but I set out what my risk is going to be for every trade. The harmonic currently for the 1 minute harmonic rotation in the ES is 3.75 points. 3.75 points. That's a lot. Which means that any trades you take are likely to be in the middle of that, and so anything less than that amount is likely to get stopped out if you're in the noise. You have to be a lot more patient, and I've been scaling in. I'm usually all in, scale out. I've been scaling in a lot, pretty much, I would say, for the last 3 months. Almost 100% of my trades are scales in, scales out versus all in, scale out. And that's just a way to manage risk. I keep the risk constant, but scaling in gives me a lot more room as the market rotations are wider. Okay, so that's what we've got. Again, I apologize for not being so engaged on Twitter as I normally am, but my focus right now is Convergent and keeping the focus, the trading focus in there. So if you're interested, just go to convergenttrading.com. If not, then I'll catch you on Twitter. Good luck today. Take care.